Try to summarize your entrepreneurial journey all the way up until right now in 60 seconds or less.
Got it. So I've been an entrepreneur for about 25 years across a bunch of different experiences. I started out in payments, moved on to software, did some stuff in media, and most recently have done a number of businesses in Europe, including starting the micromobility provider there called Voi Technology, which is in 40 countries or 40 cities in 11 countries, as well as a couple of other software related businesses, which led up to the founding of Boosted Commerce a couple of years ago. And in this business, as we'll talk about, we're essentially buying up other e-commerce companies in the Shopify, Amazon, and brand space. I think the common thread, if I had to summarize it all, is generally trying to look around the corner and see what's going to be interesting and just betting on the future with a healthy dose of optimism as to how things can go. And sometimes it goes well and sometimes it doesn't.
When was Boosted Commerce actually founded, right? Because I mean, I think a lot of people who follow the entrepreneurial space have heard about, Thrasio and these companies that are raising like billions of dollars. Were you guys started around the same time or after or before? Or how did that timeline go?
I actually don't know exactly when they were started. We basically started in the middle of 2019 and was largely driven by the fact that there were just all these interesting brands being created out of the space. And when we took a more long-term view, what excited us more than anything was not so much that there were all these companies you could buy, but that they had done a lot of the hard work. So the hardest thing is to prove that there's any level of product market fit or figure out a hack for how to succeed, whether on Shopify, Amazon, or podcasting. And everyone we talked to in the space had been able to do that. And it just felt like, for where we were, my partner founded a really successful retail chain called Charming Charlie's. The opportunity to take something from 1 to 10 seemed a lot more interesting and attractive than going from 0 to 1. But the first kind of deals we were looking at were really in sort of the beginning of 19, middle of 19.
Why did you decide to buy like physical product brands, like when you could kind of do the same thing, but with, software companies and things like that?
I mean, arguably software is, if and when it works, it is a better business on the margin level. Like it just is. But what's, and a lot has changed in software in 20 years. I mean, and even in 5 years. But what's fun about CPG and product companies is you get to use them, and you get to use them and share them and talk about them. And I love, the fact that I have our products in my home, and I love that every once in a while I'll talk to someone who accidentally bought one of our products in their home, and there's just an EQ value. My first job, actually, before I went full entrepreneur, was at Disney, and it was just a fun place to be. You could say a lot about Disney, but you tell people you work at Disney, and it makes almost everybody smile. Yeah. And that's what's fun about a CPG type business, is just brand recognition and getting to feel the things that you deal with every day.
Where's the value? Can you explain to somebody who's just beginning kind of the magic of, private equity, so to speak, and what's the point of rolling up all of these companies? How do you actually make money? How does it all work?
So my background in private equity is nil, but I could tell you how we approach it from the boosted standpoint.
Yeah.
I mean, the value, and I'll start at maybe the highest level. The value of a business is largely driven by two things. It's its current position, number one, and then number two, what you think you can do with it. And there are certain categories that people tend to fall in love more with, and that's maybe due to the fact that they're higher margin, or it's stuff that they personally enjoy, or secular trends that everyone is getting behind. And so a lot of the value that you'll be able to get for your business depends on sort of, number one, how long it's been around. Is it proven? Is it not proven? Number two, what's your margin? Meaning, and the margin being how much net profit you make against your revenue. And then number three, are you in a category that people believe that even if you mess it up, because there's always something going to happen in the world, like that secularly, there's tailwinds behind you. And that's why over the last couple of years, you've seen a lot of sort of, the growth in purchase price around things like pets, thanks to COVID, when everyone was buying dogs and cats and animals for their home, has gone way up. And then there are certain things which spiked and went right back down because the secular trend, around like face masks isn't as clear necessarily. But when we look at a business, it's category, it's how long it's been around, it's defense, durability of revenue, how consistent do we think the revenue will be, and this is across Amazon and other e-commerce businesses. And then frankly, what can we do with it? What's our vision for the business? And why do we want to own this?
Amazon FBA businesses sell for like 2 to 3x, right? Like, your EBITDA or your, final earnings.
Yeah.
And then when you roll these businesses up into a larger, and when I say roll them up for people listening who don't know understand what that means, it means kind of combining them into one massive company and then leveraging like the economies of scale with like your internal staff and, just ways to be more efficient rather than running 8 different businesses. You run one business with the same staff for all 8 of those companies as a single whole, right? So the kind of the end goal of these aggregation sort of companies is to buy something for 2 to 3x and then sell it for 5 to 6 to 10 to whatever. Is that accurate?
I think at a high level, that's true. I think in practice, it's probably one, the multiples are a little higher, but I think but the real value is created potentially more on not just putting them together, but what you can do with the businesses, because you create some level of, having more access to capital allows you to do greater things, being willing to take more of a risk. I've been an entrepreneur. I know that, like, when I was running a business that, as a solo entrepreneur, like if I spent more in marketing, I didn't go on vacation that month. Like it is a trade-off, right? And when you're a big company, you're willing to take risks that you won't as an individual or a small business. And there's a lot of value to create in that. But I think the real value we hope to create is by that knowledge arbitrage, by being able to bring people on who can take a business that's doing X million dollars a year in profit and not only know how to scale it, but also know how to run marketing across multi-channel. We have people who understand, how do you do television? How do you do this? How do you get retail distribution? And so you're building a lot of value. You're not just sort of buying it and flipping it. We're not home flippers.